Hello and welcome to Storage Trader. Our online platform is the first one built exclusively for investment in self-storage facilities. This YouTube channel shares educational information about self-storage investing designed for both owners looking to raise capital and investors looking to place capital. Before we dive in, make sure to subscribe so you don't miss more videos like this. If you find this information helpful, don't forget to hit that thumbs up button. Real Estate Capital Stack. The real estate capital stack represents the hierarchy of capital invested into a real estate deal and provides a framework to understand the risk and reward associated with each type of capital. Comprising various layers, the capital stack organizes funding sources from the least risky, and therefore the lowest returning, to the highest risk forms of capital. Senior debt has the lowest risk level and is the first to be repaid in a default scenario. These investors expect low but steady returns. Senior debt, often in the form of a mortgage, is usually the largest chunk of the capital stack. Given its secure position, being the first to be repaid in the event of default or liquidation, it carries the lowest risk and, therefore, provides investors with the lowest returns. Banks, credit unions, and other traditional lending institutions typically hold these positions, expecting steady, agreed-upon interest payments while not participating in the potential upside of the investment. Mezzanine debt bridges the gap between senior debt and equity, representing a riskier position than senior debt, but is secured over pure equity investments. Mezzanine lenders generally expect higher interest rates due to the elevated risk. In the event of default, they're second in line after senior debt holders, but before equity holders recover their investments. Preferred equity takes a back seat to all forms of debt in the repayment hierarchy. Investors in this layer typically expect stable, albeit higher returns than debt holders, and receive dividends before common equity holders. However, their potential upside is often capped, preventing them from realizing the full possible gains from the investment. In cases of outstanding performance, once preferred equity holders receive their agreed-upon returns, any additional profits go to the common equity holders. Common equity holders, often the project sponsors, are the last to be repaid in the event of default or liquidation, but they also stand to gain the most if the project performs well, since their returns are not capped. The common equity layer absorbs the initial financial hits, but also reaps the most substantial rewards in successful ventures, aligning the risk and reward principle. Investors need to meticulously analyze and understand the risk and reward metrics associated with each layer of the capital stack to align their investment with their risk tolerance and financial goals. Conservative investors might be inclined towards senior debt or preferred equity, accepting lower returns for reduced risk. Aggressive investors may opt for common equity, embracing the higher risk for the potential of greater rewards. Wrapping up, in real estate investments, achieving a nuanced understanding of the capital stack is pivotal. Each layer offers a distinct risk-return profile influenced by its position in the event of default or liquidation. From senior debt's secure position and lower returns to common equity's high-risk, high-reward scenario, investors must navigate the capital stack thoughtfully to create a strategy that aligns with their financial aspirations and risk tolerance. Be sure to listen to the following disclaimer. Storage Trader LLC is not a registered broker-dealer, investment advisor, or crowdfunding portal. None of the information contained in this recording is a recommendation to invest in any securities. Investing involves risk, and you should not enter into any transaction unless you have fully understood all risks and have independently determined that such transactions are appropriate for you. The information provided here is without regard to any particular user's investment objectives or financial situation. Please consult with your legal and financial advisors before investing, and do not invest unless you are able to sustain the risk of loss of your entire investment. Any financial projections provided in this recording, including without limitation expected IRR, are forward-looking statements and may not reflect actual future performance. Investment in any opportunities presented on this website are for accredited investors only as such term is defined by Rule 501 of Regulation D promulgated under the Securities Act of 1933. The general information provided on this recording is not an offer to buy or sell or the solicitation of an offer to buy or sell any security, and potential investors will be provided with a confidential offering memorandum prior to being offered a security. We hope you enjoyed this installment of Storage Trader's audio blog. Additional episodes may be found at storagetrader.com on our news page. Select Read More for the article you want to listen to, then click the Listen Now button. Or you can subscribe to our YouTube channel using @StorageTrader. The end.